Welcome to ETF.com education video series. Since the early 1990s, exchange-traded funds have been growing in number and in assets across the globe at a fast pace. That popularity is tied to the characteristics and benefits of the structure itself. So what is an exchange-traded fund? ETFs are investment vehicles that offer access to different areas of the market. They're structured like mutual funds, but they have a unique feature. ETFs, which are baskets of underlying assets such as stocks, bonds, commodities, derivatives, or a mix of securities, trade like a single stock on an exchange under a single ticker. What makes an ETF a unique vehicle, and a popular one at that, are five key characteristics. Number one is cost. ETFs are very cheap relative to everything else out there. You can own all 500 stocks in the S&P 500 today for as little as 3 basis points, or $3 per $10,000 invested. You can own thousands of securities across asset classes around the world for fractions of a penny on a dollar. That's because ETFs are efficient vehicles by design, requiring much less back office management and infrastructure than mutual funds. These cost savings show up in the price tag for these vehicles. It's not surprising then that low cost is one of the ETF's most loved attributes. Number two is transparency. Most ETFs in the market today offer daily transparency of holdings. That level of portfolio disclosure is unmatched in other wrappers out there, including mutual funds. Mutual funds typically only share portfolio holdings once a quarter, and that information is already lagging by then. Daily transparency might not be that important to you, but it's available in most ETFs today. That brings us to trading, another defining characteristic of an ETF. ETFs are listed on stock exchanges like stocks. You can buy or sell an ETF as easily as you can buy or sell any stock any time of day. By comparison, mutual funds execute trades only once a day at the end of the day. ETF share prices are also determined throughout the trading day, much like the price of a single stock. Tax efficiency is the fourth unique ETF trait. ETFs are very tax efficient, much more so than mutual funds, and for a few reasons. When a mutual fund or ETF sells underlying securities in the portfolio that have appreciated in value, they face a capital gain. But thanks to the way ETF shares are created and redeemed through what's known as the in kind creation redemption mechanism, ETFs can unload securities with the lowest tax basis all the time, reducing the fund's tax burden over time, and that can lead to higher after tax returns for investors. What's more, most ETFs are index based products, meaning they typically have lower turnover than active funds, leading to fewer chances of facing capital gains distributions. The fifth and final characteristic that defines an ETF is diversification. Each ETF wrapper offers a diversified pool of assets in any particular market segment. Spider S&P 500 ETF, trading under the ticker SPY, for example, gives you 500 US large cap stocks in a single ticker. ETFs also offer diversification in terms of market access itself. With more than 2,200 ETFs listed in the US today, covering all asset classes and market segments, chances are that if you are looking to own a particular pocket of the market, there's an ETF for that. For much more on how ETFs work and what they offer, check out our education library.